Hello everyone. Today we are going to discuss some special type of transactions. Some special types of transactions. In the last class we have discussed about journalizing or recording of transactions in the journal. Today we are going to discuss some special transactions or a special type of business transaction, how to record. So the first one among them we can say that compound journals. Compound journals. Or we can say compound entries. Compound entries. What is a compound entry? We have told that for every business transaction there will be at least two aspects, a debit aspect and a credit aspect. At least two aspects will be there, a debit aspect and a credit aspect. Here compound entries, the entries where there will be more than one debit aspect or more than one credit aspect or more, or both. An entry with more than one debit aspect or more than one credit aspect or both can be called as a compound journal. Okay, a journal entry with more than one debit aspect or more than one credit aspect or both. Or both means more than one debit aspect as well as more than one credit aspect. So in that case it will be called as compound entries. Let us see an example. 2020 February 1st paid electricity rupees 2000 and rent rupees 3000. Like that one transaction is given. That means rent is given and electricity is given. Rent 3000 and electricity 2000. So how to enter that transaction in a journal? Let us see that which are the aspects. First of all we have to see that which are the aspects. Which are the aspects? Electricity is one aspect and rent is another aspect. So let us write those aspects. Electricity, then rent, both are paid in cash, so cash is another aspect. So three aspects came here. Electricity we know that it is expense, electricity paid, and rent also paid, so rent is also expense, and this is asset. Okay, so if we go through the traditional approach we know that related to expenses, what is the rule? Expense means the nominal account rule. Debit all expenses and losses, credit all incomes and gains. So these two things, what can be done? Debit all expenses and losses. So these two can be debited. It can be debited, and this one can credit. Why it can be credited? For that we have to see the asset account rule or the real account rule. But it says debit what comes in and credit what goes out. If you pay rent, if you pay electricity, cash goes out. If you pay something or if you give something in cash, cash goes out. Okay, so cash will be credited. Let us see the journal. This is journal. Last class also we have prepared date, particulars, LF, debit amount, credit amount. So first of all, what we have to do? We have to write the date 2020 February 1. What is done? Rent paid, electricity paid. Both are that aspect we have to write both. So electricity debtor. The next rent debtor. 2 cash. So if you write second time debtor, you can give it to mark here to cash. 2 should start little after the starting. Okay. So electricity, how much? Electricity 2000, rent 3000, total 5000. 5000 cash is due. D, paid rent and electricity. Paid rent and electricity. Journal entry. So one more journal entry, let us see. This is regarding expense. Let us see income. February 5 received commission rupees 4000 and interest rupees 5000. Received commission and interest. See, received commission, that means commission is an income, that's why it is received. And another one is interest. So both aspects can be written here, commission, then interest. Both are received in cash. So that next element is cash. Say commission, interest, and these are the cash. So let us see which are these aspects or which category it is. If you go through the traditional approach, commission and interest received, it is income, isn't it? So we have to see that nominal account rule. What is the nominal account rule? Debit all expenses and losses, credit all incomes and gains. So these two things are income, credit all incomes and gains. So both can be credited. This one. Both commission and interest we received. That means cash received. Cash is asset. So we have to see the real account rule. Debit what comes in. Cash comes in. So we can debit it. Debit. So credit what goes out and debit what comes in. That is the real account rule. Since cash comes in the form of interest and commission, we can debit cash. Okay. Now let us journalize that. February 5. February 5. February date 2. 5. Cash received. So cash is debit. Cash debtor. 2. Commission. Then again 2. Interest. Commission how much? Commission 4000. Interest 5000. Total 9000. The received commission and interest. Okay, is it clear? So this is the case of compound journal entries, the entries where there is both debit aspects will be there, and sometimes both there will be more than one credit aspects. Okay, sometimes more than one debit aspect or sometimes more than one credit aspects, and sometimes both will be there. Both in the sense there will be more than one debit and more than one credit also may be there. Suppose paid electricity and rent this much, that means 2000 and 5000 paid electricity and rent is given. By cash rupees 2000 and by check rupees 3000. Suppose the continuation of this transaction is like this. That means paid electricity 2000 and rent 3000 by cash. For paying electricity and rent, we paid cash directly 2000 and rent 3000. Sorry, by check 3000. So cash as well as check is there. So check if there, if we issue the check, the amount goes from bank account. So bank account decreases. So we can say right here cash and bank also. Okay, the amount goes from bank. So cash and bank also can be written. So cash we will write here 2000 and bank 3000 will be written. So in that case, both the debit aspect as well as credit aspect will be there. So here cash 2000 and bank 3000. So both debit aspect and credit aspects are more than one. Such a type of transaction means either more than one debit aspect or more than one credit aspect or both, means more than one debit aspect as well as more than one credit aspect. Such entries are called compound entries. Okay. Now let us see the next topic. Now we are going to discuss the next topic, that is discount transactions. Discount transactions. Discount transactions are examples of compound journal entries. Discount transactions are examples of compound journal entries. So let us see how we can enter the discount transactions. We have studied about discount, trade discount and cash discount. And at the time when we were studying about discount, we told that sales discount or trade discount will not be recorded anywhere in the books of account, but cash discount will be recorded. Trade discount will not be written anywhere in the books of account. That means if there is a reduction in the list price of the goods, that is trade discount, that will not be written in the books of account. If there is a reduction in the payment or receipt of money, at the time of payment or receipt of money, if there allows any reduction, that is called a cash discount, that must be shown in the books of account. Okay. So in such a cases, there are two types of cash discount. That means discount allowed and discount received. Discount allowed and discount received. So discount, let us start with the discount allowed. When we allow discount, when we receive cash, isn't it? We allow discount when we receive cash. Let us explain with an example. Let us explain with an example. Here, (2020) March 1 received rupees 4,800 from Naveen and allowed him a discount of rupees 200. We received 4,800 from Naveen and allowed him a discount. Okay. In that case, what can be the journal entry? That's what we are going to discuss here. So heading should be given journal. So this journal we are discussing. In that case, the aspects are to be found out. First, received from Naveen. So received from Naveen means cash is one aspect. And allowed him discount. Discount is there, that can be considered as another aspect. Discount. And who given that? Naveen given. So three aspects are there. Cash received and discount allowed and Naveen. We can write here as discount allowed. We can write as it is, discount allowed. So let us see what are the rules for these three aspects. Cash is a real account, asset account. We know that the rule debit to what comes in, credit to what goes out. So when we receive cash comes in. Cash comes in. Then you may be thinking that discount allowed. So we are allowing discounts. That means cash is giving. Then you can think once again, if you allow discounter, are you giving cash to him? No. You are saying that allowing discount means he had to pay actually 5,000 rupees. But we told him that you pay only 4,800. That's why he given 4,800 only. So cash, how much we received? 4,800. So cash receives, debit what comes in, cash can be debited. Cash can be debited. Then discount allowed. Discount is an expense. Discount allowed is an expense. We have to go through which rule? We have to go through the nominal account. Debit all expenses and losses, credit all incomes and gains. So expense, discount allowed is expense, we have to debit it. That also can be debited. So both can be debited. Naveen is the person. We have to see person account. Debit the receiver, credit the giver. Debit the receiver, credit the giver. We receive, that means the person who receives something will be debited, the person who gives something will be credited. So here Naveen gives the cash, so he is the creditor. His name will be credited. His name will be credited. So now we can write the journal entry. So here date, particulars, LF, debit amount, credit amount. So 2020 March 1. So cash debtor, discount allowed debtor to Naveen. Cash debtor, discount debtor to Naveen. Cash how much? 4,800. Discount allowed is 200. To Naveen 5,000. Okay. Then Another one transaction, let us see. March 5 gives like this. Cash received from Manu rupees 4,500 after allowing discount of 10%. Discount of 10%. So in that case, say cash received aspects are same. So cash is one aspect. Since cash received, cash can be debited. Then discount, allowing discount. Discount also is there. So discount allowed, that also will be debited because expense. Then Manu gives the money, so he can be credited. Okay. But here discount is given 10%. So that's what we are going to find out here. Let us write the journal entry. So before that, we can complete the narration here. We received cash and allowed discount. He received cash and allowed discount. Then next, March 5. This transaction can be written. Cash is debit. Cash debtor. How much we received? 4,500. Then discount allowed debtor. Discount allowed how much? This 4,500 is there. That is after allowing 10% discount. See, listen carefully. This discount is 10%. That means 10 out of 100. Percent is per 100. So discount is after allowing, that is 10% is discount. So out of 100, discount is 10. So how much is the cash? 4,500 we received now. That is after allowing 10%. That means this is 490. Then what is 10? We have to find out. Okay? We have to find out that. That means this is 90 after allowing discount. Then what is discount? 10%. So this discount is, that means this is 90 into 10, 500 is the discount. Is it clear? Then to money. How much we had to give? Total of these. That means otherwise you can find like this 4,500. If it is 90, then what is 100? Full amount we had to pay, that is 5,000. Okay, is it clear? So this is the way of calculating discount if it is given like this, only the percentage is given. Then narration B, received cash and allowed discount. Okay, so this is about discount allowed. Now we are going to discuss discount received. Discount allowed, how we will adjust this, clear? Okay, now we are going to discuss discount received. How to adjust discount received. Now we are discussing transactions for discount received. Discount received. See an example. 2020 April 5. Paid to Gopal Traders. Rupees 9,000 for the full settlement of rupees 10,000. See, here the word discount is not given anywhere, but we can understand that it is a discount transfer. Means discount is there. Paid to Gopal Traders. We paid cash to Gopal Traders. How much? 9,000. For how much money we had to pay? 10,000 we had to pay. For that 9,000 is given. That means 1,000 is discount. Because it is given that for the full settlement of rupees 10,000. In order to settle fully rupees 10,000, in order to settle our claim for 10,000, we given and settled by 9,000 rupees. So discount is there. So Gopal Trader is the receiver. So Gopal Trader we can write Gopal Traders. That is one aspect. And cash is given and discount is allowed. You understood now the difference between 9,000 and 10,000 is discount. So discount, who gets the discount? At the time when we pay the cash, we get the discount. So discount received is there. So these are the three aspects. Gopal Trader is a personal account. Debit the receiver, credit the giver. If we pay the cash, Gopal Trader receives. If we pay cash to him or if we pay cash to Gopal Traders receives. So Gopal Trader is the receiver. Receiver can be debited. And we pay the cash. So cash goes out. Real account rule, debit what goes out. Sorry, debit what comes in, credit what goes out. So cash can be credited. And discount received is an income. Discount received is an income. So we have to think about nominal account rule. Debit all expenses and losses, credit all incomes and gains. So let us credit discount as an income. So both can be credited, that is cash and discount can be credited. Okay. Now let us enter that transaction in the journal. Let us prepare a journal. Debit amount, credit amount, everything is there. Particulars. Okay. 2020 April 5. Which are the aspects? Gopal is the debit aspect. We have to write first Gopal Traders. Gopal Traders. Debtor. Then to cash, to discount received. Cash account and discount received. Okay. So Gopal Traders, writing ARC is not compulsory here, because if you write an account name here, it means that it is an account. Okay. So Gopal traders debtor to cash and to discount. How much we had to pay to Gopal, full amount, how much we had to pay? That is fully settled. So we can write 10,000 was the total amount to be paid to Gopal. That is settled by paying cash 9,000. And he allowed a discount. That means we received discount 1,000. And the narration is we paid rupees 9,000 for full settlement of rupees 10,000. Okay, or you can write paid rupees 9,000 and received discount of rupees 1,000. That also can be. And let us see another transaction. April 7. Paid rupees 9,500 and received a discount of 5%. Received a discount of 5%. So here cash is there. Paid rupees 5,000 and received a discount of 5% from Ram and Sons. So paid cash to Ram and Sons and received a discount from Ram and Sons 5%. So aspects are Ram and Sons, then again cash and discount received. Okay, writing separately this aspect is not compulsory. That is for understanding purpose. Okay, while preparing the journal, you can straight away write the journal from the transaction. No need to write these aspects. This is for making you understand the concept I am writing. Okay, but for you it is not compulsory to write the aspects. You can straight away write or prepare the journal from the transaction. So Ram and Sons receives cash, so they can be debited, and cash we pay the cash, and the discount we receive, income receives, so credit, and cash goes out, so that also will be credit. So we can credit both. Therefore the entry will be April 7, Ram and Sons account debtor, Ram and Sons account debtor, to cash, then to discount. Okay, discount received. So cash, how much we paid? 9,500. 9,500. How much will be the discount? That means 9,500 is after deducting 5% discount. So this is 95. Understood now? 5% means out of 500, 5 deducted. Remaining we pay. That means 95% is paid. Then what is 100? Sorry, what is 5? That is discount. That means 500. And here the total of that will be the amount to be paid to Ram and Sons. That we can find out like this also. 9,500 if it is for 95. What is 100? That means again 10,000. Okay. And the narration be paid to Ram and Sons and received 5% discount. That's all. Okay, so that's all regarding discount transactions. Clear? Okay. Now we are going to discuss another topic, that is transactions related to drawings. Drawings transactions. Yes, transactions of drawings. Transactions related to drawings. We know that what is drawings. What is drawings? Withdrawal of money by the proprietor for his personal purpose is called drawings. If owner withdraw money or goods for his personal purpose, that is called drawings. So it can be withdrawal of money or withdrawal of goods. It can be withdrawal of goods or withdrawal of money. With both the cases we will discuss here. Suppose one transaction is there. Mohan withdrew rupees 10,000 for his personal purpose. Mohan withdrew rupees 10,000 for his personal purpose. So what are the aspects here? He withdrew 10,000. So cash is there 10,000. And withdrew means drawings is there. Drawings is there. And Mohan is there. Okay, so these are the three aspects. Mohan here means Mohan's capital. Okay, so cash is one aspect, drawings is another aspect, and Mohan is another aspect. So we can write cash. When he withdraws cash, what happens to cash? From our business, cash goes out. Credit what goes out. So cash can be credited. Okay, cash can be credited. And Mohan we can write Mohan's capital because it decreases from his capital. Okay, it decreases from his capital. So Mohan's capital can be written. And let us see what happens to Mohan's capital. Mohan receives the money. So debit the receiver and credit the giver. That is the personal account rule. So what can be written? Mohan's capital will be debited. Mohan's capital will be debited. Okay. Then what happens to drawings? Drawings is a decrease of capital. That means capital will be decreased. So since capital decreases, it can be, that means the amount of capital is credited. If money is there in the capital, that will be credited. From that capital, money decreases. So in drawings will be debit. Okay. Then cash goes out, so cash will be credited. And drawings is an expense, or we can say that it's a deduction in the capital. Okay, so drawings will be debited, and Mohan's capital we told that normally when Mohan withdrew money, Mohan receives the money. But since here we have written capital, what happens to capital? Capital decreases. He takes from his capital only. So his capital is decreases. So that's why here we have written that Mohan since receives, Mohan can be debited. But here the decreases from his capital. Okay, decreases from his capital. So what happens? We will write drawings debtor to cash, and that decreases his capital. So this will not be taken here now. That drawings and the cash only will be decreases, and this decrease, what means Mohan's capital decrease will be adjusted afterwards. Okay, this will be that drawings afterwards will be deducted from Mohan's capital. That is the next step that we will discuss at the time when we prepare the capital account. Sorry. So now we need not take this Mohan's capital account. This is mentioned here to understand that when drawings comes, that drawings will be deducted from the capital. Okay, understood? So in that capital account, this amount will be drawings will be deducted. That is at the end of the year. Okay, finally this drawings account will be balanced, and that balance will be transferred to capital account, and that will be shown at the time of preparing the final accounts. Up to that time, we need to consider these two only. Okay, that means now what you have to think, cash and drawings are there. That means cash goes out and drawings in the form of drawings. We are spending our money, we are giving to Mohan. Okay, because he withdraws that. So cash goes out and drawings arises. Drawings is a deduction of capital. Capital has a credit balance. So in order to deduct that credit balance, it will be shown on the opposite side. That means debit side. So that's why drawings is debited. Should understand that drawings is debited. Why? Because it's a deduction of capital. Capital has a credit balance. In order to reduce the credit balance, we have to show on the debit side. Okay. So let us prepare the journal. Debit amount, credit. See, we can write that journal entry. What can be debited? Drawings can be debited on, suppose the date is not given, we can write 2020 June 5. 2020 June 5. Drawings debtor, how much? 10,000. 10,000 to cash, how much? 10,000. Being drawing made by owner. Drawings made by owner. Okay. Then another one transaction. 2020 June 10. Withdrawn goods of the value of rupees 25,000 for by the proprietor for his domestic purpose. Withdrawn goods of the value of rupees 25,000 by the proprietor for his domestic purpose. Proprietor or owner withdrew some of the goods, not cash. Goods withdrawn for his domestic purpose. Domestic purpose means personal purpose. That means drawings. Isn't it? Withdrawing for domestic purpose means drawings. So first aspect we can write drawings. Okay. Next, what happens? Goods he withdrawn. Goods he withdrawn. So we cannot write here cash. Goods only withdrawn. Goods means what we have with us as the goods for sale. From that it is withdrawn. So what to do? Now we cannot sell that. So can we deduct from the sales? We will not deduct from the sales because sales comes with the market value, or that sale amount includes some amount of profit also. So we will not take profit from the owner. So what we will do? We will deduct that from the cost price. That means from the goods purchase. Suppose we are purchasing the goods and selling. From the goods purchased, owner takes that sum of the goods. Okay, from the total amount of goods purchased for the business, owner took some of the goods for his personal purpose. Okay, so whatever we purchased for the business, that is called purchase. It is called purchase. From that purchase, owner took. So the total, suppose we have purchased goods for rupees 1 lakh. Out of that, value of 25,000 goods is taken over by the farmer. So now the total purchase is only 75,000 for us. Understood? Not 1 lakh. It will be 75,000. Okay. So what to do? That purchase is an expense. Purchase is an expense. So expense will be debited. But out of that expense, 25,000 now decreased. That is not our expense. Whose expense? Owner's expense. That who will give? Owner has to give from his money. That means in his capital, we will take money from his capital for 25%. Okay. So since expense, that is purchase and expense decreases, that purchase can be credited. That's what the modern approach rule says, that transactions of expense. Expense debit means increase, credit means decrease. So purchase decreases, so it can be credited. Okay. So purchase is another aspect. Purchase is another aspect. Drawings will be debit and purchase will be credit. So let us complete the advance entry here. 2020 June 10th, drawings, debtor to purchase, being goods withdrawn by the proprietor for his personal use. How much? 25%. Okay. And one more secret I am going to tell here. Every time purchase, every time we debit, because purchase is the most important expense. And this is the only one time. Okay, this is the only one time where purchase is credited. Okay, purchase will be credited in this time only. That means when goods are withdrawn by the proprietor, that time only purchase will get a credit. Otherwise, always purchase will be debited. Okay, should not forget. When purchase gets credited at the time when there is goods withdrawn by the proprietor. Okay, so today we have discussed first compound entry, then after that discount transaction, that means discount received transaction and discount paid transaction. Then here we have discussed transactions of drawings. In the next class we will discuss transactions related to bank or bank transaction. Okay, today we are going to wind up. I hope all of you understood this. Okay.